Welcome everybody to Safe Option Strategies. Welcome to Never Lose Money Again. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and I'm going to take the next 35 to 40 minutes to show you some things that are going to help you make more money in the stock market. They're going to help you be a more profitable trader. And maybe more important than anything else, I'm going to show you how to never lose money again in your portfolio. Just a real quick introduction into why we do this presentation. For some of you, you have seen this presentation 3, 4, 5, 10, 15 times. Every now and then I hear from someone and they say they've seen it every time I've done it in the last 6 or 7 months. About every 2 to 3 weeks, I do a new recording of this program, and a lot of times we cover the same information. Sometimes we mix it up a little bit and do some things a little bit. I'm going to do a couple things different this time. So even if you've seen this before, to help make it more understandable, to help make it more enjoyable, I've changed the order of some things. But here's what I want to stress to you as we get going with this presentation. Number one, this class is not meant to teach you everything to do. It is an introduction class into what we do at Safe Option Strategies. What I want to do, but let me add to that. I would be very happy, I would be very pleased if what I show you in this presentation helps you in some way protect your portfolio or be a more profitable trader, whether you ever do anything in the future with Safe Option Strategies or not. And I think that's different than what a lot of companies do. A lot of times you sign up for a webinar like this, you jump online, you watch it, and you think the magic ingredient, the magic formula is going to be there, and it's going to fix everything that you are doing wrong, or everything that you need to make your trading better is all going to be right there. And then you get this 30-minute to an hour-long sales pitch. Okay, I'm not going to give you that 30-minute to hour-long sales pitch, I promise you. I'm going to try and teach you a couple of things that are helpful to you. Now, I want to be transparent. I want to be very honest. We hear that term thrown around all the time about being transparent. It's become more of a buzzword lately than it's ever been before. Well, I'm going to jump on the buzzword bandwagon here, and I'm going to be very transparent. My hope is that by the time you get to the end of this presentation, I have shown you a couple of things that at least pique your interest enough to inquire more about what we do at Safe Option Strategies and how we do it. I'm not gonna pull the wool over your eyes. I sell an investment education program that is changing people's lives. It is changing the way people trade. It is helping people become consistent, profitable traders, and it's helping them, no matter what the size of their portfolio, no matter what style of trading they've done before, we are helping people become consistently profitable in their portfolios. Safe Option Strategies is not a get-rich-quick program. I absolutely cringe when I hear people throw out advertising pieces that talk about turning $1,000 into $10,000 a month income, or taking $10,000 and becoming a millionaire within a year or two. I would love it if those things were true. Maybe a few of them are true. I think if there are a few cases out there where someone has really done that, I guarantee you they cannot teach it, because they cannot teach you how to get flat out lucky. And I promise you, if they've taken $1,000 and turned it into a $10,000 a month income, or if they've taken $5,000 or $10,000 and turned it into a couple of $1 million, they have got flat out lucky. People don't do that in the stock market through some magical formula that anyone can do. They get flat out lucky. It's as simple as that. There's no way to sugarcoat that. I'm not about trying to teach you something that cannot be taught. I'm going to teach you some very sound strategies, some very easy ways to protect yourself and to protect your money and grow it consistently, and outperform the market averages by a pretty good margin. But I'm telling you right now, if you're looking for something get rich quick, this is not the place to find it. I'm going to teach you some things, and then hopefully you will indulge me at the very end of this presentation, and I'll tell you a little bit about what Safe Option Strategies teaches, and then I'll show you an offer that you can take advantage of for a short period of time that I think will make this incredibly affordable. People are surprised when they take the time to inquire what we're doing. I get people all the time that are surprised with how affordable our program is. There are programs that I know my industry very well. I know my competitors. I know a couple of closer competitors that do some things kind of similar to what I do, and they're charging $10, $15, $20,000 for their program. And they don't charge that up front. They lure you in with something for $500 or $600, or in some cases for $40 or $50. And then they immediately start to upsell you and try and sell you the next piece of the package and the next piece of the package and the next piece of the package. And if you get everything that they have to offer, you're into them for $10, $15, $20,000. And I promise you, they do not have as complete an education with as much follow through and as much success as what our program does. So if you get to the end of this and you have no interest at all in looking closer at what we're doing, that's okay. I hope I can teach you something that is helpful to you. If you'll indulge me, listen to the very last part of this presentation as I talk about some ways you can join our program and save a lot of money in doing so. All right, I'm going to teach you how to trade with little or zero risk through collar trading. Some of you have heard about collar trading. Some of you have some familiarity with that. I don't think you have seen collar trading the way we teach collar trading. And I will tell you this. More than anything else I've learned in the 20 some odd years I have been trading in the stock market, I have learned that if you figure out how to stop losing money. Now, I know that sounds, even as I say it, I can't say it with a straight face because it sounds kind of silly. Of course, no one wants to lose money. You don't get into the market to lose money. But a lot of people can't figure out how to keep from losing money. They get into a trade, it's going a certain way, it suddenly turns on them, and they have no idea what to do. They have no idea where to go with it. So the key first is learning how to not lose money, and I'm going to show you how to do that. I'm going to show you how to take any type of option trade. Now, collar trading involves some stock ownership, and for some people that's a turnoff, but I'm going to show you how to take option-only trades if that's what you're more interested in, and through some adjustment strategies teach you how to dramatically increase your chances of profiting even when a stock goes against you. I'm going to show you how to legitimately, consistently put together a cash flow strategy that does not expose you to really high risk. One of the biggest things people run into, one of the biggest problems people have in being consistent, profitable traders is they get lured into these cash flow strategies. I want to take this $10,000 and I want to make 10% on it every single month. Think about that. Think about that just for a minute. If you had a way to make 10% every single month, why in the world would you pull that 10% out of your portfolio every month if you had $5 or $10 or $15,000 or $20,000? Why would you pull that 10% out every month? You would be making over 120% a year, and that's if you did not reinvest every penny of it back into growing the portfolio. And if you invested everything into growing the portfolio, you would come out closer to 160% annually if you could make 10% every single month and reinvest it. But people get lured into this notion that they can do that. If they really could do that, you would sit on your hands. You would never pull a penny of your money out of the market until it was several billion dollars. The reality is that's not something that is doable, and that's not something that is teachable. But if you need to find a way to take a portfolio that you've built up and saved up a little bit and turn it into a realistic, consistent cash flow that is much safer than these other things that people are teaching, I'm going to show you how to do that. I'm going to give you a glimpse into it. And then I'm going to talk at the end of this presentation. This is something I've never done before in one of these presentations. I'm going to talk about what it costs you to not know how to do this. And I've got a recent example that I'm going to share with you, and I think it's going to be shocking. All right, let's dive right in, because I'm going to try and go through all of this in a short period of time so that this doesn't turn into a really long-term situation. How can I honestly say that you can trade with zero risk? Because everything you see out there in the world of stocks and option trading, futures trading, forex trading, they all say the same thing. Trading comes with risk, and you're responsible for your losses, and don't ever trade money that you can't afford to lose. So how could I get away with saying there's anything such as zero risk trading? There is a strategy, and some of you, like I said, are a little bit familiar with this. Some of you may be hearing about it for the first time. There's a strategy called a collar trade. It involves owning stock, using a long put option exactly the way you would use an insurance policy, and using a short call option to pay for some or all of your long put option. And you can, in fact, set up collar trades for very little and sometimes for no risk. Let me give you an example. I took this screenshot just earlier today. So this is a brand new, up-to-date screenshot. I say that because I'm going to show you some examples that are a couple of weeks old coming right up here. But this is one I just took today. Right now today, if you went out and bought some shares of Micron, and the reason I chose Micron is this. They are a couple weeks away from their next earnings report. Earnings reports are a time, anybody who's owned shares of stock through an earnings report and not understood how to collar trade, I promise you, you've spent some stressful nights. You've wondered going into that earnings report, is the stock I own going to be up 10, 15, 20% tomorrow, or is it going to be down 20, 30%? And there are stocks that are more volatile than others, and some that are not very volatile, but you always worry going into an earnings report. Well, Micron's got earnings coming up in a couple of weeks. You could buy shares of Micron right now today for $33.23. Now, by the market's open as I'm recording this. Those of you that are on with me live, you're taking some time away from the market, I know, but the markets are open right now. Micron is trading at $33.23. You could buy some shares at that price. You could immediately go out and buy a 34 strike price long put option. In every way you can imagine, this works like an insurance policy. I'm going to show you how in just a minute. You could also, at the same time, go out and sell a 37 strike price short call. Now, this gives you the right to sell your stock at $34 a share, but it comes at a premium. You have to pay $264 per share to do it. This gives someone else the right to buy your stock away from you, but they have to be willing to pay you $37. And you right now get a credit of $2.38 for letting them do that. So your price of your stock plus the price of your long put, which we're using like an insurance policy, minus the credit that you're going to get right now for that short call, gives you a net cost per share. Your total out of pocket per share is $33.49. Now, if you've traded options, you know that you have to do options in increments of 100 shares. So you could do this trade exactly the way I have it set up right now. You could do this trade for, let me get my little pin here. You could do this for $3,349 plus whatever your commissions are that you pay to open the trade. Now, the reason I point that out is because a lot of people, when I talk to them about owning stock, a lot of people that view this introductory presentation, they're option traders, or they're commodities traders, or they're futures traders, or they're forex traders. And they're not accustomed to going out and spending money on owning stock, or they don't want to go spend money on owning stock because they don't think it's as profitable a situation, or they think it's too expensive. They just look at stocks like Amazon, they look at stocks like Google and Apple and Tesla and Priceline. They look at these stocks that are $300 to $500 to $1,000 a share, and they say, I can't afford to own the stocks. Well, anybody that's got a portfolio of $3,500 or more could afford to go out and set up this trade exactly the way I've set up. And here's the beauty of this trade. Between now and the expiration of those long puts, I have no risk. My total investment is $33.49 per share, and I have the right to sell my stock at $34 a share. If Micron reported their earnings in a couple of weeks and the stock tanked and they went down to $15 a share, guess what? I can sell at $34. If Micron had a good earnings report and they skyrocketed to the upside without making any kind of an adjustment to this trade at all, I could still make 10.5%. You're trading off. Now, people always tend to think, whether they ask the question or not, people tend to think when I share this with them, yeah, but what if Micron goes to $50 a share and I'm only going to make $3.51? Look at all that money I'm leaving on the table. You're trading a smaller profit for zero risk. It's easy to look at this scenario and say, well, what if I could have made $15 a share? Yeah, you might really be losing sleep and really be upset over only making 10%. That's a rough place to be. What a horrible thing to be so upset that you can only make 10.5% on a position that you own. I lose sleep when I've got $33.49 a share times 100 shares invested in a position, knowing that I could lose 40, 50, 60% of that if that thing really tanked and went against me. And crazier things have happened. Now, I don't think, even on a poor earnings report, I don't think Micron's going to go down 30 or 40 or 50%. But I'm telling you right now, stranger things have happened. It's unlikely, but it's possible. I know for a fact that I could set up this position right now today and be guaranteed that I don't lose any money. That's a collar trade. It works like this. You buy the stock, you buy the long put option. As the stock price goes down in value, the long put option goes up in value. The only loss is the cost of the long put. That's just like an insurance policy. Folks, if I went out and bought a $45,000 automobile right now today, and let's suppose for a moment I had cash to go out and buy a $45,000 automobile. Even if I pay cash for it and the bank doesn't force me to have insurance, I'm going to pay for some insurance on that. I'm not going to go out and buy an automobile for that amount of money and not get insurance on it. So I'm going to go out and pay my monthly premium. I'm going to pay my $100 a month or $120 a month, or maybe I got a better price on the policy. I'm going to pay my $75 a month for my insurance. And some of that I have to have. It's liability insurance. It's in case I go out and hit somebody or something. But I'm going to pay that extra for the comp and collision in case something happens. Something that's outside of my control. Something like a tree falling on my car. Something like a hailstorm. Something like the car catching fire and exploding, hopefully with nobody in it. I'm going to protect against those catastrophic things that could happen. Like a bad earnings report that causes a stock to lose 30 or 40% of its value almost in the blink of an eye. If I have to cash in my insurance policy because something catastrophic has happened, I'm not going to get my premium back. I'm going to lose my premium, right? That $70 a month or $100 a month that I paid for the insurance, that's the cost of insurance. I want to be protected by having my insurance policy offset the loss in value of my asset. Do you know most people don't even realize they can insure a stock? But that's what long puts were invented for. That's what they were developed for. Not just to bet against a company and hope that you can profit from a company going down, but to protect when you own your stock. Doesn't even have to be a $30 a share stock. A couple of weeks ago, I told you I had some older examples. A couple of weeks ago, I showed some people this example on Ford. Stock for $10.18. Long put option for 26 cents. That's our insurance policy. Short call for 24 cents, pays for most of the insurance. This one had a little tiny bit of risk in it. This one had about 20 cents per share of risk. Do you know what happened to Ford shortly after we showed people this position? Well, if you've been paying attention to what's gone on in the market for the last 6-7 weeks, haven't we had, I think, 6 weeks in a row of major sell-off? Now, things are coming back this week. We're having a few good days in a row. But we're a long ways away from what the sell-off of the market has been over the past 6 or 7 weeks. Ford went down to almost $9.50 a share. And that doesn't sound like a big drop from 10.18, but 10.18 down to 9.50 is a 68 cent that's a 68 cent drop. Divide 68 cents by $10.18. That's almost a 7% drop. 68 cents doesn't sound like a lot, but that's almost 7%. No one wants to lose 7% on their position. Do you know if you'd watched my presentation 3-4 weeks ago when I showed this example and set up this exact position on Ford, do you realize you would have zero loss in your position right now? And it was still in a position, it was still set up so that it could make money if Ford would have gone the other way. This trade would have cost $1,020 to be in. I keep pointing that out because this is not something you can't afford to do. And I'm telling you, if you first learn how to not lose money, making money becomes easy. A few weeks back, I'm back to Micron, but this chart that this screenshot that I'm showing you right now is from several weeks ago. In fact, it's from a couple of months ago. We set up a trade on Micron, similar, but a little bit different. We got the stock, we got the long put options, and we got covered calls, but we did it in a different ratio. We got 500 shares of the stock and 5 short calls, but we added 8 long put options. Total cost was $22,000. That's because we did it with this many shares. You could have done the same thing with 200 shares or 300 shares, 100 shares. A couple weeks later, when Micron took a major plunge, this was shortly after the whole China trade war thing got ramped up again and China pulled out of the negotiations and Trump threw out some tweets that tanked everything. Stock took a big drop. In fact, the stock dropped almost 20%. Our 500 shares were down over $4,000. Our long puts were up in value over $4,400, and our short calls had gotten over $1,000 profitable. We could have exited this trade a few weeks after getting in when the big market sell-off took place and been profitable 7% on a stock that was down 19%. And all this was a little variation. It was just a little variation of the traditional collar trade. We got more long put options than what we needed. We still paid for most of them with a short call, and we still had very little risk in the trade if it would have gone flat or gone up. We still could have profited it if it had gone up. So let me back up and focus on this a little bit. Learning a simple collar trade is the key to never losing money again in the market. Learning little variations to collar trades and learning how to adjust and add to your position through collar trading is how to make a lot of profit and still be at little or no risk. Anyone ever heard of dollar cost averaging? You buy a stock for $100 a share. The stock goes down to 50 and you buy another share at 50. Okay, and that's a good strategy to use. A lot of people use that strategy. And there's pros and cons to using that strategy. If you bought one share at $100 and you bought a second share at $50, whoops, I'm trying to draw with a mouse. It's not the easiest thing to do in the world. You bought a second share, and my mouse is not cooperating, at $50 a share, your total out of pocket is $150. Okay, that's fine. But what happens when you start doing this times 10 shares or times 100 shares? The challenge becomes, I'm sorry, let me back up. The whole reason you do this is that $150 divided by 2 shares makes your average price per share $75. That's what dollar cost averaging is. You buy some shares at $100, you double up on those shares when it's at $50, and now your average price per share is $75. So the stock doesn't have to go back nearly as high for you to get break even. You can get back to break even and profit a lot faster if you've averaged your price down like that. That's the whole reason people do it. Okay, the challenge is when you start dealing with 10 shares, 100 shares, 1,000 shares, where do you come up with the extra money? If you did 100 shares times $100 for each share, you've got a $10,000 investment. So 100 shares at $100, $10,000 investment. Well, in order to cost average that down to 75, you've got to come up with another $5,000 right here. That's the challenge. Where do you come up with that other $5,000? Your $10,000 is only worth $5,000 now. That can be a hard pill to swallow. And now you've got to come up with another $5,000 to make all this work. When we collar trade, this is one of the main things we teach at Safe Option Strategies. When we collar trade, we teach you how to do the dollar cost averaging with the long puts. You buy 100 shares of the stock and you buy long put options that protect you, and you have to pay for the long put options, and then the stock drops, and in order to buy another 100 shares, you sell the long puts. Remember, this has gone down $50 in value. Meanwhile, this has gone up $50 in value. So you sell these, and it's that money that you use to buy the new stock. The difference is this. You've added 100 shares to your position without having to come up with another $5,000. This is where the $5,000 came from. And in a very real sense, that's like adding shares for free. You're still out the couple dollars, the $2, $3, $4 you paid for the insurance, but you added the shares free of charge. And so your average cost per share, including what you paid for your insurance, is only $51. That stock doesn't have to go anywhere near $75 for you to get break even. You're profitable if the stock is over $51 a share. You're profitable 100% if it ever goes back to $100 a share. I'm back to Micron as an example. We sent out to all of our students at Safe Option Strategies, every student that was with us back in March of last year. So we're about 1 year and 1 year and maybe 3 months into this trade. We sent out an alert to all of our students saying we're going to get into Micron. Now, when you look at this chart, look at this chart that's a little over a year on Micron. There are two spots on this chart that would have been the absolute worst time to get into Micron. One of them is right here, and one of them is right here. Those would have been the two worst times to buy stock in Micron when you look at this chart and look where it's gone. You know, we bought stock right there. I mean, we couldn't, if we had, and the reason I'm pointing that out, the reason I'm showing that to you is to show you how profitable you can be in collar trading, even when a stock you choose is not exactly going the way you think it should go. We got into this position at one of the two worst times we could have got into it anywhere in the last year. In April, we sent all of our students an adjustment, and that adjustment, doing what I just showed you to do, selling the long puts and using the money from the sale of those long puts to add more shares. We added 100 shares in April. We made another adjustment in May that was simply rolling our long puts and our short calls. We made another adjustment in August and added another 100 shares. We made another adjustment in September and added another 100 shares. We made another adjustment. I'm just fast forwarding here. We made another adjustment to the trade in January and added another 100 shares. We made another adjustment at the end of January to add new short calls because we let some short calls expire that were way out of the money. We made another adjustment in February. And what I don't show on this screen, because I didn't update this from a few weeks back, about 1 week ago, we added 200 more shares. Our position is actually now 1,000 shares. We've lowered our average price per share to below what the stock is currently trading at. And we've got Micron coming up with its earnings in just a couple of weeks. And they're actually trading down around here right now. If all Micron does is go back up to where it was just a few weeks ago, maybe a month and a half ago, if all it does is go back up to 40, our profit on this trade is going to be phenomenal, and it's on a way larger number of shares. We're already up 27. When I took this screenshot, and this was a month and a half ago, when I took this screenshot, we were already up 27%. That was before adding another 1,000 shares of stock. These are all collar trades that we've done over the past year. Advanced Micro Devices is our worst one, and we're still profitable on it more than what the markets did all last year and higher than where they're up right now. On some of these, we absolutely crushed it. These are all collar trades we did with our students. How would you like to have no risk or very little risk and have this kind of return? This is what we're teaching people how to do. And the really, truly, the most important part of all of this is the fact that we were never exposed to any significant risk. Now, I took a long time to go through the collar trade portion of this. I'm going to go through these next parts very quickly, but they're simple to understand. I'm not going to give you the whole magic formula. I'm introducing you to it. When you think about adjusting a trade, that's become another buzzword. That's another one of those buzzwords that's developed over the last 5 or 6 years. 15 years ago, when I started teaching people how to trade these strategies, there were 1 or 2 companies that ever talked about adjusting trades. Now there's a half a dozen to a dozen companies that talk about adjusting trades. And some of them are way, way off base on what they're teaching. I can just tell you that from personal experience. The reason adjusting a trade is basically changing the direction of the trade. That's the super simple way to say it. And the reason you've got to learn how to adjust trades, and this applies to option-only trades, this applies to directional long options, it applies to spread trades, you can apply this to commodities and futures. I don't recommend trying to do this with Forex. That's a high-risk game that I don't personally get involved in, but there's a lot of different trading styles that you can apply adjustment strategies to. And the reason you need to learn to adjust is because when you get into any position, you have an expectation of what it's going to do. There's no guarantee, but you have an expectation. And the problem is there's at least 2 or 3 other things that it could do. If your expectation is bullish, you might get a flat pattern. You might get a bearish pattern. You might get something that goes bullish but not fast enough. You might get a situation where it goes bearish but only slightly, and then it rebounds and goes bullish. There's just so many things that can happen. And it's that not knowing that is what costs people money in the market. We get into a position and we do our due diligence. We look at technical indicators and we look at fundamental analysis and we listen to news reports and we read and we study and we do all this stuff. And then the stock does something completely unexpected. Anybody pick up on the example I have here? Tragic thing that 2 different planes in 2 different countries went down for similar reasons, and they were both Boeing 737 planes. Now, Boeing didn't do it on purpose. There may have been something negligent. There may have been something different they could do. But you know what happened? Anyone who thought they were going to make some money on Boeing stock saw this plummet on the second of those 2 accidents. And this is one that I didn't take a new picture. This is a couple months old, but Boeing is trading down here now. They've continued to come down. And I think they've come down and touched $300 a share not too long ago, or gotten close to it. Maybe 320 something is the lowest they've gotten recently. But it's these unexpected things. And these things are going to happen from time to time. They're not always going to be this dramatic. But if you don't know how to adjust a trade, you're going to be in trouble. People go through this all the time. 3 out of 4 trades that they place are going exactly the way they need them to go, but 1 out of 4 is losing, and that's costing them a winning portfolio. Sometimes it's just because they think they know what's going to happen. Sometimes it's just bad luck. Wrong trade, wrong time. Everything looks good for Boeing. It looks like a great company. It's testing new all-time highs at $440 a share, and they've got massive numbers of orders, and the 787 Dreamliner is doing great, and the 737 MAX is their most technologically advanced plane, and there's a software glitch, and a couple of planes go down, and people die. And you're just the wrong trade at the wrong time. Nothing you did wrong. It's just bad luck. But here's the biggest reason people take those losses. Because this can be fixed. This cannot. This is the key. In its simplest definition, a trade adjustment is when you roll one or more of your options in a spread trade or a collar trade, or when you add a new option to an existing trade like a directional option trade, such that the roll or the addition of the option changes the direction of the trade. It'll probably also change your target break even and your target profit. That's what an adjustment is. When you try option trading or spread trading or futures trading without knowing how to adjust trades, this is what often happens to people. They make a nice profit, they reinvest that profit, they trade with more money the next time, they make a nice profit, they reinvest that profit, they trade with more money on the next trade, they reinvest that profit, and all of a sudden one trade goes against them. And if you've traded options or futures, spread trades, you know how fast you can get into, I mean, that's not even a big loss. 60%, it can be a lot worse than that in a short period of time. 3 out of trades worked exactly the way you wanted them to, and you're at a 35% loss because of one of them. When you learn how to adjust trades, those same 3 trades, same reinvesting your profits, the same thing, this is how dramatically different it can be, because you knew how to adjust the trade and you knew how to set it up correctly. This is one of the big keys, is setting it up correctly so that you can adjust it. Knowing how to adjust a trade is worthless to you if you're setting up trades that can't be adjusted. One of the big focuses at Safe Option Strategies, one of the main things we focus on in this company is teaching you how to set up trades that can be adjusted. That is huge. And because you've set it up so it can be adjusted and you execute on that adjustment, instead of losing money, you still had 1 out of 4 trades go against you, but just adjusting it to no loss. Even if you can't adjust it to a profit, but you can get it to no loss. Look at the difference in the 2 portfolios. Same 4 trades. One knew how to adjust, one didn't. I had a guy, this goes back 7-8 years ago. I had a guy call me after listening to a presentation like this, and he said, Jeffrey, I'm not kidding. 9 out of 10 trades for the past 2 years have gone my way. And that's an exact ratio that he had kept track of for 2 years. And the 1 in 10 that was going against him on average had him dead flat over a period of 2 years. 9 out of 10 trades going his way, and he wasn't profitable. And that was in a really robust market. That was before the 2008 crash. So I guess it's been a little over. No, not that. I'm sorry. That was during the recovery in 2009 and 2010 that he was in that position. Okay. Now let's talk about cash flow. One of the most luring, appealing advertisements that you see right now in the world of investment education is, I'm going to teach you how to make consistent cash flow every single month in your portfolio. If you got $1,000, great. We're going to make $1,000 a month for you. You got $10,000, we're going to make $5,000 or $6,000 every month for you. Folks, it's a load of BS. It's just absolute BS. And I'm sorry if that offends you. I don't mean to be offensive. I'm just trying to be honest with you. Don't buy into it. Credit spreads are the primary lure for these types of strategies. They look, you're going to get paid to be in this trade. Someone's going to pay you to be in this trade. And it's great and it's fantastic. And when it goes your way, you're loving life. But as soon as it doesn't go your way, those are the trades that can quickly be at a 50, 60, 70% loss. These are all, I took all of these screenshots yesterday. So these are all very recent. This is a great bull put spread on Apple. There's a nice bull put spread on Home Depot, and there's a nice one on Nike. These are all less than 3-week trades if you went all the way to the day of expiration. Less than 3-week trades, and these are very decent percentage returns on bull put spreads. Problem with all 3 of these trades is that they can't be easily adjusted. If you got into any one of these trades right now and they trended sharply against you, you're taking a way bigger loss than what you could have made. In every one of these situations, the risk, that's not uncommon. I'm not saying that's a bad thing. In credit spreads, oftentimes your risk is going to be greater than your reward, but it's got to be a good ratio. Something as simple as, now here's what I want you to pay close attention to. These are the same screenshots. All I did, you can see the gray that I've still got this highlighted over here. All I did was shift from a bull put spread to an in the money bull call spread. I'm using the same strike prices. I'm using the same expiration date for the options, same companies. And in every one of these cases, the maximum reward is similar. The Home Depot one is not quite as good. The Nike one is not quite as good. The Apple one is actually a little bit better. And again, this is just one example. And I'm not here to tell you that I never do credit spreads. I do credit spreads. I like credit spreads. I'm careful with them. And I prefer in the money bull call spreads for one simple reason. If any of these trades went against me, they are relatively easy by comparison to adjust. A simple roll of the short option to a lower strike price can get me out of a loss in the trade and maybe even get me back to profit. Something as simple as that, when applied to any type of option strategy that you're going to use for cash flow purposes, all you've got to do is incorporate that ability to adjust them. Our spread trade strategies that we teach and our cash flow strategies are similar strategies. The cash flow trades are shorter duration. There are more frequency of trades. There are more number of trades. We get in and out of the trades faster, but we still place trades that can be adjusted. And it makes all the difference in the world to consistent cash flow generation. And folks, our numbers speak for themselves. We've only been doing the cash flow stuff for the last 2 years. It's been incredibly profitable. Incredibly profitable. Look at the numbers that we've got on our returns compared to what the market has averaged. Here we are in June of 2019, and with this recent sell-off, I think the S&P is only up 7 or 8% right now. We're up almost 35% this year, and we're not quite halfway through the year. Folks, this is our track record. It speaks for itself. And if you're not getting these kind of returns, you got to take a closer look at what we're doing. Let me tell you just briefly about the cost of not knowing, and then I'm going to wrap everything up. About 8 weeks ago, a student joined our program. And he had a $65,000 portfolio. Folks, you don't have to share with me how much money you're trading. I've had people join my program that have $3,000 or $4,000 to trade with. It's, you know, you don't have to be a millionaire. You don't have to have 40 or 50 or 60,000 or 600,000 in the market. I'm just giving you an example. This student had a $65,000 portfolio. He was in about 6 different stocks that he owned and had a variety of option trades that he was doing as well. Okay, think about what the market has done over the last 6.5, 7 weeks. I had a conversation with him at the beginning of this week, before we had the couple of big up days. The stocks that he had in his portfolio when he joined our program 8 weeks ago are down cumulatively about 17%. That would have been $7,600 that he would have been down just on his stocks. If he had stayed in the option trades that he was in at that time, those would have been down over 70% right now. He would have lost nearly half his portfolio. Now, the conversation he and I had a few days ago, he showed me exactly the day that he said he said, look, on this day when we had this big, huge sell-off, this is a couple weeks ago. Remember that Monday we had that I think the Dow Jones Industrial Average lost 670 points one day. He said, I would have bailed out that day. That would have been too much for me. We looked at that day and where all of those positions would have been on that day, he would have lost over $20,000 of a $65,000 portfolio. Gone. Poof. Maybe he makes it back someday. Maybe he doesn't. He's got to get a lot more than that would have been a 40% loss to his portfolio. He'd have to get a lot more than 40% gain on the $40,000 he had left. He'd have to get more like a 75, 80% gain on the 40,000 he had left just to get back to where he started. Instead of his portfolio taking that hit of nearly $30,000, every one of his option-only trades that he's done since then has been profitable, and he hasn't lost a penny on any of his stock positions because he got all of them put into collar trades. A couple of them he's already leveraged into more stock. And if they just go back up close to where they were 7-8 weeks ago, he's going to be big time profitable in those already. You got to ask yourself the question, how much is it worth to you to know you're not going to lose money anymore? I have become convinced, absolutely convinced in my experience in trading my own portfolio and teaching it to other people. Folks, I don't teach something that I don't do. I do these strategies in my own portfolio. How much is it worth you to not lose money anymore? I've become convinced that if you learn how to not lose money, the opportunities to make money are there. One of the things that we do at Safe Option Strategy, everyone's heard this saying, right? Feed a man a fish and you feed him for a day, teach a man to fish and you feed him for life. That's what we're trying to do here, but with one really important twist. We want to teach you how to do these things on your own. That's the goal of Safe Option Strategies. I do not offer a standalone advisory service. People ask me all the time, can I just copy the trades that you're sending out to your students? I said, nope. You got to learn how to do the strategies. Now, if you're learning how to do the strategies, you can follow every single trade that we do. We send out trades every week to our students, and we show them exactly how to set them up, exactly where to set their target exit, exactly what adjustment needs to be made and when, if they get to the point that we need to do that. We do a live class with our students every single day, Monday through Friday, to talk about the trades we have open and for them to ask questions about trades they have open and how certain things work. And you don't have to attend live because we record every single one of them and they go on our website. So it's not, you don't have to be there live or you're going to miss out on stuff. But here's the problem I always had with this saying, feed a man to fish and you feed him for a day, teach a man to fish and you feed him for life. Well, what happens if the man starves while he's learning how to fish? If I went out in the wilderness right now and had to rely on I'm talking about real fishing here. If I had to rely on my ability to fish to stay alive, I'd probably die. If I could take my brother-in-law, who's a great fisherman, or a really good friend of mine, been a friend of mine for 20 plus years, is a great fisherman. If I could take one of them with me, and if they would keep me fed long enough to learn how to fish, I'd be great. But if I had to go out and do it on my own, I'd starve. So we want you to learn how to fish at Safe Option Strategies. We want to teach you how to do this, but we will keep you fed while you're learning. That's what we will do for you. We will help you make money. The day you join, if you decided there was something here that you liked, if the price fit for you, the day you join our program, you can start placing real trades with real money, and we'll help you get those trades profitable. But we'll do that as we're teaching you how to do it and how to make it work. I know one of the hardest things, I have this conversation almost on a daily basis with people. I know one of the hardest things in the world is when you have spent money on other education programs and now you're looking at something like this and you're thinking, oh man, this sounds good, but I can't go buy another program. I can't spend money on something else. Everything I've tried hasn't worked. I don't know what to tell. That's hard. I know that's hard. I have conversations all the time with people about how difficult that is. But I absolutely know this for a fact. If you took a chance on our program, it is the last purchase you're ever going to want to make of investment education because it works. You're never going to need another program. I'm so confident that we can help you make money and help you profit that I guarantee the program with a money-back guarantee unlike any you'll ever see. And the only criteria I have ever used to measure the success of this company is if my individual students are successful. When I'm done with this recording, now you might be watching this. I've got a few people on with me live. Not a big group on live right now, but thanks for joining us live. Most of you that are watching this program are watching a recording on my website. And thank you for your time in doing that. As soon as I finish this recording, I'm getting on the phone with a student of mine that joined the program about 6 months ago. And he's struggling. Now, through some emails that we've traded, I know that he's struggling because he hasn't been doing the program. I know that he's shared this with me. I know that he's struggling because he's tried to put on some of the trades that we put on, but then he hasn't followed up on the alerts that we send out saying, now's the time to adjust it to this, or tomorrow morning we're going to open this or do this. He just hasn't been paying attention to those. And he hasn't had as much time to view the classes and learn the stuff. But he was absolutely shocked when after we traded a couple of emails, I said, let's get on the phone. Let's block off an hour. Let's block off a couple hours if we need to. Let's look at what you're doing. Let's look at how you're doing it. And let's see what I can do to help you become profitable in this. Folks, I will do everything I can legally do to help my students be profitable. And if I can't help you be profitable, I will give you your money back. It's simple. I keep it really, really simple. We have a collar trade program for those that are interested in collar trading and owning stock that's available in a 1-year or a lifetime membership. We have a spread trade program that you can do as a 1-year or a lifetime membership, and a cash flow program that you can do as a 1-year or a lifetime membership. We keep it really, really simple here. Our full price on these programs, our full retail pricing is probably less than a third of what our closest competitor charges for anything even close. But, and you can find that pricing on the website, but please don't go on the website and pay the retail pricing. If you will email, now the easiest way to email, you went to my webpage. If you got the email that showed the advertisement for this class, you went to my webpage, and right below the class on the webpage is a really simple form that you can fill out. You can ask questions. There's a place for you to ask questions. Put in your email. Only put in your phone number if you want someone to call you. We will not ever call someone unless they request it. Put in your phone number if you'd like someone here to call you. Or if it's easier for you, or if the form doesn't seem to be working exactly the way it should, you can just create an email and email at info@safeoptionstrategies.com. Email us through that form that's below the class on the web page, or call. And if no one answers, please leave a message. We will call you back. If you will do nothing more than this, if you will fill out that form as an email and ask what discount we are offering right now, or if you will call and ask somebody here what discount we are offering right now, or if you will leave a message if someone's not here and ask what discount are you offering right now, I will send out some information to you, or someone here will send out some information to you with the promotion that is going to run through Monday. Now, I'm going to tell you right now why this promotion is only going to run through Monday. On Tuesday morning, very, very early, it's a 5:30 a.m. flight. I don't know what I was thinking when I booked it. Tuesday morning at 5:30 in the morning, I'm jumping on an airplane with my family, and we're going to be gone for a week. Now, I'm still going to be paying attention to the market because my students are still going to want to know what's going on with trades. And I'll be sending out information from vacation land. But I'm not going to do any advertising or marketing next week at all. If you have any interest at all in what we're doing, if you have any desire to learn a little bit more about this program, between now and the close of business on Monday, I'm going to offer a discount that is probably deeper than I have ever offered. And I'm going to do that honestly so that no one in the company has to worry about any marketing or advertising or anything while I'm gone on my vacation. And I think you're going to be blown away by the offer that we're willing to give. There is no obligation to buy anything. You are not required to make a purchase for simply sending an email or making a phone call and saying, what is the discount you're offering? I'll send you a 2-page PDF that's got details of the 3 different programs, what the regular retail price is, and what the discount is that will be good through the close of business on Monday. If you like what you see, we would love to have you on board as a student. If not, I wish you nothing but the best, and I hope eventually you find that magic formula and find what's going to work for you. Thanks for taking time to watch our presentation. I hope to hear from you.